Have you ever wondered what the future of money looks like? With all the advancements in technology, we've already seen significant changes in how we pay for things. Think about how mobile payments, online banking, and even cryptocurrencies have become part of our everyday lives. But what if the next big change in the world of money is something completely controlled by the government? Enter central bank digital currencies, CBDCs. These digital currencies could be the next step in the evolution of money. In this video, we're going to break down what CBDCs really are, how they differ from the cryptocurrencies you might already be familiar with, and what they could mean for your financial future. Stick around to discover the truth about CBDCs. 10. What exactly is a central bank digital currency? First, let's define what we mean by a central bank digital currency, CBDC. Simply put, a CBDC is a digital version of a country's national currency, issued and regulated by the central bank of that country. In a world where digital transactions are becoming the norm, CBDCs would essentially be the digital form of physical cash. However, unlike the money in your wallet, CBDCs wouldn't have a physical form. They'd only exist in digital form, available through apps or digital wallets on your phone or computer. Countries like China and Sweden are already experimenting with their own versions of CBDCs. For instance, China's digital yuan is one of the most advanced digital currencies in the world today, with tests already underway in major cities. The primary goal of a CBDC is to offer a secure, stable, and government-backed digital alternative to both cash and digital payment methods like credit cards. 9. How do CBDCs differ from cryptocurrencies? You may be wondering how CBDCs differ from cryptocurrencies like Bitcoin, Ethereum, or others. While both are digital currencies, there are some critical differences that set them apart. Cryptocurrencies are decentralized. This means no central authority, like a bank or government, controls them. Instead, cryptocurrencies use blockchain technology to validate transactions, making them relatively anonymous and resistant to government control. However, this also makes them volatile and sometimes risky. CBDCs, on the other hand, are centralized. This means they are controlled and issued by a country's central bank, just like traditional money. The value of a CBDC is meant to stay stable and closely linked to the country's official currency, like the US dollar or the euro. Unlike Bitcoin, the value of a CBDC is not driven by speculation or market demand. It's designed to be more stable, more secure, and fully regulated by the government. So while cryptocurrencies are an alternative form of money, CBDCs are essentially the digital version of the money you use every day, controlled by the government. 8. Why are countries creating CBDCs? You might wonder, why would a government bother to create its own digital currency? After all, isn't the current financial system working just fine? Well, there are a few reasons why governments around the world are starting to explore CBDCs. One of the main reasons is the rapid growth of digital payment systems and the rise of cryptocurrencies. While cryptocurrencies can offer some benefits, like lower transaction fees and increased privacy, they're not perfect. They can be volatile, difficult to regulate, and hard to track. Governments worry about the rise of decentralized currencies taking over traditional financial systems, and CBDCs give them a way to maintain control over their economies. Another reason for the creation of CBDCs is to enhance the efficiency of the payment system. By going digital, governments can make transactions faster and cheaper. For example, sending money abroad through traditional banks can be slow and expensive. But with CBDCs, cross-border payments could become much quicker and more affordable, as everything would be processed through a government-backed digital platform. Lastly, CBDCs could help reduce the risks associated with physical cash. As digital transactions become more common, keeping cash in circulation becomes increasingly costly. It also presents the risk of theft and fraud. With CBDCs, money can be stored securely in digital wallets, reducing these risks. 7. How would CBDCs work in everyday life? So how would a CBDC actually work in day-to-day life? Let's say you want to buy a cup of coffee at your favorite cafe. Instead of paying with physical cash or using a credit card, you'd pay using a digital wallet connected to your CBDC account. You'd open your wallet app, select the CBDC, and send the exact amount to the cafe's digital wallet. The transaction would be instantaneous, just like swiping a card. but the difference is that it would all be processed through the central bank system. One of the advantages of CBDCs is that they could potentially be more accessible than traditional payment methods. For instance, since CBDCs are purely digital, they could work seamlessly with mobile phones, allowing more people to access financial services, even in areas where traditional banking infrastructure is lacking. This could open up financial services to unbanked populations who might not have access to a physical bank. 6. How secure are CBDCs? When it comes to money, security is always a top concern. While cryptocurrencies are often associated with being anonymous and relatively secure, they're not without their flaws. CBDCs, on the other hand, are likely to be much more secure due to their government-backed nature. Since CBDCs are issued and regulated by a central authority, there would be strict regulations in place to protect users from fraud, theft, and cyber attacks. Central banks have a long history of managing money systems and would be responsible for ensuring the security and stability of the currency. Governments would likely employ advanced encryption methods and cutting-edge cybersecurity to protect users' digital wallets. That being said, no system is entirely immune to hacking or data breaches, so central banks would need to invest heavily in cybersecurity to protect users' financial data. But because CBDCs are government regulated, they're likely to be more secure than decentralized cryptocurrencies, which are sometimes vulnerable to hacking or scams. 5. Could CBDCs replace cash? One of the most significant questions surrounding CBDCs is whether they could replace physical cash entirely. The answer is complicated. While it's possible that CBDCs could eventually replace cash, it's unlikely to happen in the immediate future. Many people around the world still rely on cash for everyday transactions, and in some countries, cash usage remains very high. That said, we're already seeing a trend toward a cashless society in many parts of the world. Countries like Sweden and South Korea are already on the path to reducing the use of physical money. In these places, CBDCs could provide an easy transition from cash to digital currency. However, for CBDCs to completely replace cash, there would need to be significant changes to the way people interact with money. Governments would need to ensure that everyone has access to the tools required to use digital currency, including smartphones, internet access, and digital wallets. And they'd also need to consider the privacy implications of a cashless society. The potential for increased government control. One of the biggest concerns about CBDCs is that they could give governments more control over their citizens' finances. Since every transaction would be recorded digitally, the government could theoretically track exactly where and how people are spending their money. While this could have benefits, such as reducing crime and improving tax collection, it also raises important privacy concerns. For example, what if the government decided to freeze your CBDC account because of a suspicious transaction? Or what if they limited your ability to make certain purchases? With digital currencies, governments would have unprecedented access to your financial data, which could be used for more than just tracking illegal activities. While the likelihood of government overreach in this way may seem low, it's still a concern that many people have as CBDCs become more widespread. 3. The risk of financial exclusion. As more countries move toward digital currencies, there's a real risk that certain groups of people could be excluded from the financial system. In many parts of the world, people still don't have access to the internet or smartphones, which means they would be unable to use CBDCs. Even in developed countries, some people may have difficulty accessing digital wallets or mobile banking apps, particularly elderly people or those with disabilities. If cash is phased out completely in favor of CBDCs, these groups could be left behind. To prevent financial exclusion, governments would need to make sure that everyone has access to the technology and resources needed to use CBDCs. Otherwise, there could be a widening gap between those who are financially included and those who aren't. 2. The potential economic impact of CBDCs. CBDCs could have a significant impact on the global economy. For one, they could make monetary policy more efficient. Central banks would have the ability to directly control the money supply, which could help manage inflation, interest rates, and other key economic indicators more effectively. This could be particularly useful during times of economic crisis or uncertainty. However, there are risks to this increased control. If central banks have too much power over the money supply, they could misuse it. For example, they could print more digital currency to finance government spending, which could lead to inflation. So while CBDCs could offer benefits, they also raise concerns about the potential misuse of power. 1. The future of CBDCs. So what does the future hold for CBDCs? While it's still unclear exactly how things will play out, one thing is certain. CBDCs are likely to become a significant part of the global financial landscape. Whether they'll fully replace cash or just coexist alongside traditional currencies remains to be seen. But one thing we can expect is that governments will continue experimenting with CBDCs in the coming years, and we may see them roll out in countries all over the world. As technology continues to evolve, so will the way we handle money, and CBDCs could be at the forefront of that evolution. So what do you think? Are you excited about the future of digital currencies controlled by the government? Or are you concerned about the potential risks and loss of privacy? Let us know your thoughts in the comments below. If you found this video helpful, don't forget to hit that like button, share it with your friends, and subscribe to our channel for more videos just like this. Thanks for watching, and we'll see you in the next one.